What's up, guys? Welcome back to the channel. My name is Johan Lorenzo, and boy oh boy, is it an important week in the stock market. As many of you have already seen, the stock market is bleeding out and it needs like 6 tourniquets to stop the bleeding. Okay, so this week, the Fed is meeting. The FOMC meeting is on the 25th and the 26th of January. So it's tomorrow, Tuesday, and then on Wednesday. And boy oh boy, is this an important meeting. So without further ado, let's get into the video. So the Federal Open Market Committee, also known as the FOMC, will be having its first meeting of the year tomorrow on Tuesday, January 25th. So in case you don't know anything about the FOMC, in a nutshell, they usually meet about 8 times a year and they review the economic and financial conditions of the country. And then they figure out how to mesh everything together and regulate things such as inflation. And that's when their monetary policy comes into play, interest hikes. So the biggest question going into the meeting is, how many rate hikes are we going to actually get throughout 2022? So in the Fed's last mid-December meeting, they were projecting to have at least 3 interest rates throughout 2022. The only thing is, since that meeting, the Fed's 12 regional bank presidents have made comments that maybe suggest they can tighten down a bit more than 3. So this is why now Wall Street is now projecting 4 interest rate hikes throughout the year. So taking that into consideration, I don't think the Fed is going to raise interest rates just yet. And I say that because their balance sheet, right? Now, the Fed is still expanding its balance sheet and continuing to buy assets in the open market to keep those interest rates low. And they've made it clear in that December meeting. Their intentions are to finish that buying spree through mid-March, and they want to finish that process before raising the interest rates. So depending on what they discuss tomorrow and Wednesday the 26th, the stock market can either continue to climb up a little bit or free fall again downward without a parachute. So in case you didn't know this meeting is going to be very important tomorrow and there's going to be a lot of eyeballs watching. I suggest you do the same thing if you have some skin in the game and you want to protect your money, or at least have a plan and know what's going on. So what happens when interest rates rise, right? Let's take a look at Investopedia and see what they have to say in this article. Obviously, when interest rates hike, that's not a good thing for consumers, right? So let's take a look at what this says. When the Federal Reserve acts to increase the discount rate, it immediately elevates short-term borrowing costs for financial institutions. This has a ripple effect on virtually all other borrowing costs for companies and consumers in an economy. Because it costs financial institutions more to borrow money, these same financial institutions often increase the rates they charge their customers to borrow money. So individual consumers are impacted through increases to their credit card and mortgage interest rates, especially if these loans carry a variable interest rate. When the interest rate for credit cards and mortgages increases, the amount of money that consumers can spend decreases. And that's the big thing here, guys. If we get a hike in interest rates, and God forbid we were to get 5 or more of these, right, throughout 2022, I'm not going to be too happy with that, and neither is the rest of the economy. That's why stocks are taking a beating right now. It's going to be tougher to get mortgages. It's going to be tougher to get car loans for people. It's just not a good thing. So this is going to be key in tomorrow and Wednesday's meeting. So I'm not sure if you exactly noticed or not, but before the end of the day today, the market started to rally upwards. I was at the gym, I was training, and one of my partners goes, "Hey, have you seen the market?" I took a look at my phone, and I went from being down over $30,000 this morning to being down $4,000. So apparently, you can call me a conspiracy theorist or whatever you want. There has to be something good coming out tomorrow, right? In my opinion, the Fed meeting might go a little bit better than what we're expecting for tomorrow because of this same exact reason. The market just started to rally right before the close of the market. What does that mean? Maybe a lot of big hedge funds are buying this dip because they know good news is coming out tomorrow. I mean, that would be insider trading. Oh no. We all know insider trading does not happen. That's illegal, right? I mean, big hedge funds only get mad when the little guys do it and there's a short squeeze. But other than that, all jokes aside, insider trading is real, guys, and I do believe insider trading happens. I mean, just look at Nancy Pelosi. So for that reason, seeing the market rally like that before the end of the day, I think we might have a pretty good day tomorrow in regards to the meeting. So I'm expecting the meeting to go pretty well. As I said before, I don't think they're going to hike interest rates yet, at least till mid-March, but we will see. So let's just take a quick look at this Yahoo Finance video.
Let's get back to Jared Blickery, who has a final thought for us. And Jared, there's an interesting article on Bloomberg today, which apparently pointed to the VIX and a metric that you can use with the VIX to signal market bottoms, and that we might have actually gotten that metric. But what do you want us to consider after what we've just witnessed today?
I think we need to consider that we are in potentially, not necessarily, but potentially a massive repricing of risk, similar to where we found ourselves in February and March of 2020 at the beginning of COVID. This time around, we have a Fed that has a lot more sway. In fact, it's all kind of surrounding the Fed right now. Where
Jerome Powell, make the money printer go brrrr.
Didn't have that kind of optionality 2 years ago, except to throw everything in the kitchen sink at it. Here is the VIX. You talked about the VIX. Well, this is a huge reversal, and this could be an early step in the right direction here. Let me just put a one-year chart. We can see we've had many big spikes before. Looks like this one is actually taking these out. But you go back on a 2-year basis, and you can see this doesn't even approach the volatility that we saw in the early part of the pandemic. So are we heading back that way? I don't think so, but we need to keep our eyes and ears out because we are seeing a lot of risk-on, risk-off behavior more.
So now, guys, think about that. It's obviously not as volatile as it was when the Rona took off in March of 2020. But then again, is this? I try to think about it. Is this little run that we had today towards the end of the day? Is this a little fake out? Is this a little fake pump to continue to come down? Because obviously the stock just can't fall down forever. It's exhausted itself. Maybe it's doing a little bounce up to continue going downward. We don't know. I'm leaning towards the side that the Fed meeting is going to be good and there's some type of insider trading going on and the hedge funds know it's going to be a good announcement. So that's what I'm leaning towards, but we'll have to see. Back to the video.
Off than risk on. Here's today's leaders market. Now, retail had a really nice day off of the Kohl's news. That was a bright sector. So XRT is a retail ETF. That's up 6%, followed by 3% for the home builders. ARC components, ARC ETF fund, that's up over 2.8%. Then you have software, IPOs, internet, regional banks. We have the stocks, that's chip stocks, transports. So we've seen this screen before.
Now, mind you, everything was getting crushed when the market first opened in the morning. And towards the end of the day, everything started to rally. I mean, what's the reasoning behind that? It can't be a bunch of little guys buying up the stock, right? This is big institutions buying up stock on the dip, right? That's my opinion. I mean, there's a huge Fed meeting tomorrow. What does that indicate to you? Could there possibly be something leaked to some of these big hedge fund managers and they're buying up a bunch of stock? I mean, maybe. I sure do believe it, but that's just my guess, all right? Let's look at a couple stocks here, right? Let's take a look at the Dow Jones here, guys. Look at this ginormous green candlestick right before the end of the market. Let's take a look at the NASDAQ. Same thing with the NASDAQ. All day trading downward. End of the day, ginormous green candlestick. Let's look at the S&P 500. Same thing. Obviously, trending downward all day. Towards the end of the day, ginormous green candle, a ton of buying pressure. Something is a little shady, right? The biggest meeting of the Fed, the first meeting of the year, is tomorrow when they're going to let us know more or less what the interest rates are looking like. I mean, tomorrow and Wednesday, we should know, right? You would think the market wouldn't rally or make as big of a comeback as it did already until after Wednesday, that people know more or less what's going to happen. This is why I'm leaning towards there might be good news coming out tomorrow and Wednesday. So I guess we'll have to see, but that's another one. Let's take a look at Seeking Alpha. Guys, look at QYLD. I mean, buying opportunities are still everywhere, right? The 52-week range of QYLD for all my dividend investors out there, this is for us, baby. QYLD, $23.58 is the top of their 52-week range. They're at $20 right now, okay? Let's look at another one. Let's take a look at VOO. One of my favorite ticker symbols right here, the Vanguard S&P 500. Their 52-week range is 441, the top. They're at 404 right now. Major discount again. Let's take a look at the SPY. Maybe you like the SPY. Same thing. 479, I'm sorry. 479 is the top of the SPY in the 52-week range. Let's go to Triple Q. For all my riskier ETF investors. 408 is the highest 52-week range, and they're at 353 right now, Triple Q. Let's take a look at a stock I really want to look at that's a little bit of a dividend stock, but is mainly a growth stock. Microsoft, MSFT. 349 is their high 52-week range, and they're at 296. Talk about a deal, right? Let's take a look at another one. AMD, one of my favorites. 52-week range. 164 is the high. They're at 116 today. They actually made it as low as like 107. I was like, my account was bleeding bad. Trust me, I got 1,200 shares. But I believe in the company, so I'm going to hold. Let's look at another one. Apple. Apple's high of 182. They're at 161. On sale. You guys buy iPhones, right? You buy, look, I have an Apple laptop. You guys buy the products, grab it while it's on sale. So guys, yeah, there are a lot of opportunities in the market right now. Just do what's comfortable for you. If you guys saw the video, Meet Kevin sold all of his stocks and sold all of his crypto. He sold out of everything. It is what it is. Some people are bashing him for it. You got to do what you think is right for you. I recently sold all of my dividend stocks. I guess now in hindsight, it was a pretty good time, but I sold all of my dividend stocks in my public portfolios because of my house. I was building a house. I had to put some money into the house, but I put most of that money that I got through trading, I put into Tesla and AMD. And guess what? They're getting crushed right now. So we'll see if I even use that money after all for the house. I might have to dig into my savings, but we'll see. But regardless, do what you feel is best for you. If you have to sell some stock because you don't feel comfortable and you can't sleep at night, go ahead and sell your stock. I mean, I'm not going to bash you for it. Maybe some other people in the comment section will, but I'm not going to bash you for it. You have to do what makes you feel good. But I highly suggest looking at these discounted prices and grabbing a couple shares here and there. You're going to thank yourself in the long run, because since the history of the stock market, it always recovers. It always recovers. And I'll bet my bottom dollar on that. And if it doesn't recover, then we got a lot to worry about, because if the stock market tanks completely and it never comes back and everything goes to zero, we're going to be out there eating ants and mice, because it's going to be crazy, right? So that's that. So if you have a little bit of money on the sideline and you're sitting on some cash, maybe it's a good idea to dollar cost average into some of these positions like Microsoft, Apple, some of these smaller dividend paying companies, but the ones that you can still work your way up and get high growth in the future. Thank you guys for watching. Don't forget to give this video a big thumbs up, and don't forget to subscribe to my channel if you haven't. A lot of you guys that are watching the videos are not subscribed to the channel. Hit the subscribe button. It doesn't cost you a thing, and it helps the little channel grow, and I would greatly appreciate it. With all that said, I'll catch you on the next one. Peace!